Hey, it's Todd. Welcome back to another A&M Backstage Pass. Now, this month, I figured I would do something kind of neat for you. I'm going to share with you not only 3 of the financial documents that I review on a regular basis, but I'm actually going to share with you the versions of these documents that I first used when I started scaling my business many moons ago. This way, regardless of where you're at with your business, whether you're super advanced or whether you're really just launching your business, these are 3 documents that you can and should use in your own business. Now, before we jump in and take a look at the first of the 3, I want to make sure that you understand just how incredibly important it is that you have a process for staying on top of your financial metrics. It is critical that you know from a financial perspective what is going on in your business day to day, week to week, month to month. I cannot stress that enough for you. Even though we really kind of migrate towards marketing, and we love the kind of the marketing and the advertising, the traffic generation, the conversion side of business, it is incredibly important that you, as the entrepreneur and ultimately the CEO of your business, that you understand exactly what is happening in some critical areas with your financial metrics. Like, I cannot stress this enough. Problems will creep up. Sometimes serious problems will creep up if you don't have a handle on your financial metrics. I'm going to make sure with this month's Backstage Pass that you have 3 simple documents that you can either fill out yourself, or if you work with maybe an accountant or a bookkeeper, you can have them give you these. Now, as you're about to see, 2 of the 3 I review, or I did review, I still do, just different versions. I review on a daily basis, and one of these documents I review on a weekly basis. Very, very important. Let's take a look at the first one. The first is what I call month-to-date sales tracking. This is a number that you're going to want to look at on a daily basis, and this is something that you personally should fill out. This is a simple spreadsheet, as you'll see in a second, that compares your actual sales month to date for every day of the month compared to where you should be at for the month with sales based on your monthly goal. So in this mock-up for you, you could see at the very bottom, you could see that we're assuming here we're setting a goal of $100,000 for the month of February. You'll notice in the first column all the way to the left, we've got each day of the month listed out. In the second column, we have a breakdown, an accumulating breakdown of where you should be at on any given day in terms of sales based on your monthly goal of $100,000. So you'll see in this example that each day, on average, you should be generating, or you need to generate, $3,571.43. If you generate $3,571.43 every day, each day, for example, for the entire month of February, that will add up to $100,000. And so what this does is it shows you where you should be by each of the dates. At the end of the first, $3,571. By the end of the 7th, you should be at least $21,428.57. By the end of the 14th, you should be at $46,428.57. By the 21st, $71,428.57. See, like, what this is telling you each day is how are you performing compared to how you need to perform from a gross sales perspective in order to hit your monthly gross sales goal, in this case of $100,000. And so here's the way this works. Very simply, at the end of each day, you're going to look at, and you can actually do this in the morning. So, for example, of the next day. So, for example, the morning of February 2nd, you would look at where are you at? What's the total amount of gross sales that you've generated, up to the day before, right? And so you might say, all right, we did $4,000. We're month to date total sales for the month. We're at $4,000. You might say the morning of the 3rd, you'll look at where you were at by the end of yesterday up until the 2nd, and you might say, all right, we were at 8,000. And then by the end of, you come in on the morning of the 4th, and you'd see that by the end of the day on the 3rd, you were at 13,000. And what this is showing you is that, right, so if by the end of the 3rd, you're at 13,000 of actual month-to-date sales, right? If you look at what your quota is based on your monthly goal, that tells you that you're at 121.33% of your goal. So over here, if you had, a bad day, this means that, right, like by, on the 4th, you only brought in $1,000 because by the end of the 3rd, you were at 13,000. And so if you were only, if you only brought in $1,000 for the day, that means your month to date is 14,000. Now you can see it tells you that you're at 98% of the goal. So you're off the mark, right? Over here, you could see, wow, now we're at 92% of our goal. So every day, what this is doing for you is this is showing you where you are at, how you are actually performing compared to how you need to perform to hit your goal. And rather than look at this sporadically, or rather than look at this on a weekly basis, this gives you the ability to look at this in the case of the month of February. It gives you 28 opportunities to realize whether something is off the mark, off track. It gives you the ability to make a decision. It gives you 28 chances to make a decision, to do something different, rather than if you're only looking at this number once a week, right? You only have 4 opportunities in a month to make a decision, to make a change. If you're looking at it every day, it's in the forefront of your mind. It's in the forefront of your thinking. And I recommend that you do this in the morning so that you understand, like right away, you understand where you are at and how you're performing. I cannot say this enough. This is so valuable and critical because what it does is it gives you first of all, it gives you a target, right? And it gives you a measurement of how well you are performing. A target and a measurement. A target and a measurement. It's not simply a target, and it's not simply a measurement without a target. It's a target and a measurement, and it gives you 28 to 30 opportunities to make a change. And so extremely important, something you should do every single day. The next document I look at is what I call revenue income statement. This is something that I look at daily when you're first getting started. You could probably get away with looking at this twice a week, but as you get bigger, as your team grows, as your revenue grows, your expenses grow, you're going to want to monitor this on a regular basis. I like to look at this every single day. What this is about, this is a blown up screenshot from a spreadsheet. Every day of the month has this block. So there's this block of rows and columns for every single day of the month. Now, the reason why I look at this every day is because I look at our margin. I want to make sure, I want to keep our margin, our overall profitability of the company. I also want to keep that at the forefront of my mind. So I want to make sure that I am keeping our sales goal and our month-to-date sales performance top of the mind for me, right? But that is really top-line revenue. Gross sales is top-line money. It's just how much money did we bring in? How much did we sell? But this is about what percentage of every dollar is falling to the bottom line. And I'm right for this purpose, for this document, when I first started, I literally just looked at this. I literally, when I got these numbers, I looked right at the margin. Now you might want to, depending on the type of company that you have, depending on what it is that you are marketing and selling, you might have a margin of 10%, meaning out of every $1 of gross revenue, of revenue that you generate, only 10 cents drops to the bottom line. It might be 5%, it might be 50%. Every business is different. Some businesses have a lot higher cost of goods. Some businesses have no cost of goods. If you're in the consulting business, for example, if you're in the info product business and you're selling everything digitally, there's no cost of goods there. And so the margin that you are shooting for is going to be different depending on your business. What I always want to make sure of is that we are never allowing our margin to shrink. That means, for example, let's use this as a simple example over here. So let's say that month to date you are at $50,000. And month to date, your month to date expenses are $20,000. So, excuse me. So you've generated $50,000 in sales. You've spent $20,000 month to date at this point, giving you a month to date income of $30,000, right? And giving you a month to date margin of 60%. That means that 60% of every dollar of revenue that you generate is dropping to the bottom line. And this is just big picture, right? This is if the month ended today, if the month ended with this, that means that you generated 50 grand, you had 20 grand in expenses, your business generated 30 grand of income. That's a 60% margin. Now let's say, for argument's sake, that 60% was what you were shooting for, right? And 60% would be a high number. Well, I want to make sure that day to day, week to week, month to month, that I'm not allowing that number to shrink. In other words, right, I don't want that number to start to go down, the margin, right? Like, I want to make sure that as our revenue grows, that margin at least remains the same, if this was my goal. Because oftentimes what happens, and it creeps up slowly, is that as revenue goes up, expenses go up. But oftentimes expenses go up quicker than revenue, meaning that your margin is shrinking. And so to have the same percentage or the same amount drop to the bottom line, you actually have to generate more. Right now, what this is saying is that out of every $1, 60 cents drops to the bottom line, right? And well, we don't want it, like, look, you want to be careful that your business isn't becoming inefficient, that your business isn't becoming bloated. Meaning, like, if this dropped down to 30%, let's say, for argument's sake, you would have to do $100,000 in order to generate the same $30,000. If your margin, because your expenses went up, if your margin shrinks, that means you have to generate more money to have the same amount hit your bottom line. Point being, I look at this because I want to make sure that not only are we hitting our revenue goals, our sales goals, but that our margin is remaining the same. You want to do the same thing. This is one of those things that you've got to recognize, that sales mean nothing. Profit at the end of the day, income in this case, is everything. You can't live on revenue. You live on income. And so you want to make sure that your business continues to run efficiently. Rather than seeing your margin decrease, if anything, you want to see your margin increase. You should work on getting your margin higher and higher. By getting your margin higher, by trimming expenses, running your business more efficiently, that means your income can grow without your revenue even growing. And if you can increase your margin and you increase your revenue, you can grow your income exponentially. So this is something that I like to look at every day. And you can see just from you could see from this that I'm able to get a quick snapshot every single day of where we are at compared to where we're supposed to be at. Are we on pace every single day? And how are we doing in terms of our margin? Two of the three reports that I recommend that you also look at on a regular basis. The third one is very simple, and it is a cash flow statement. This is something that I look at on a weekly basis. This is actually a mock version, just an example version. This is the same version that I've used for years. Today it's just a little bit more built out, but it works like this, right? And at the beginning of the week, it's what is the starting bank balance, right? What is the beginning bank balance? What is outstanding on if you have a credit card or credit cards? How much is outstanding that is due? If you have any outstanding checks, if you pay any vendors via check, what's outstanding there? And then it'll tell you your net beginning bank balance. So it's saying that, in essence, that after we subtract your payments that are due on your credit card, the checks that are going to clear, that you are beginning this week with $725,000 in your bank. And this is just an example. Then what amount, what amount of money came into the bank? In this case, right, $100,000. Total monies available, $825,000. How much money went out of the bank? So $50,000 went out of the bank, right? $100,000 came in. And so we've got $775,000 cash balance at the end of the period, right? So we're ending this period this week with $775,000 in the bank. We started, right, with $725,000. You can see that up here, net beginning bank balance. And so our change in cash position for the week is $50,000. That means that we had an increase in the bank of cash by $50,000. Now this is important, because here you want to make sure that from a cash perspective that your business isn't losing cash. It's a weird thing that cash flow, cash in an entrepreneurial business is king. Cash, with the right cash flow, your business you can remain in business even if you're not profitable for years. But it's also very possible that a business that is profitable can go out of business by mismanaging their cash. So I'm always looking to I'm looking at our change in cash position for the week, because what you are looking, right, you are obviously looking for a positive increase in your cash position. This means that money, your bank balance is growing. Obviously, a very simple thing, and that's what you want to look at. And so this is something that you want to look at every week. And so there you go. Very simple. You're looking day to day at your month-to-date sales versus where you should be. Very simple. Takes just a couple minutes to get these numbers, input them into the spreadsheet, and to see where you are at. Then you want to look at daily. You want to look at your month-to-date margin. You want to make sure that your margin is remaining steady and it's not shrinking on you. And then weekly, you want to look at the cash flow. In this case, I look at change in cash position for the week. You want to make sure that it's not going negative, that it is at a bare minimum, that it is at least remaining the same. Ideally, of course, you want it to increase. These three numbers, if you track with these three simple this approach, right, with these three simple sheets, these three simple documents, your insight into your business day to day, week to week will be tremendous. You will see that you'll have such a better handle on what is going on from a financial perspective just with these simple documents that man, you'll be in much more control. One thing that I did forget to mention is so what happens in the event that I see our margin shrinking, right? What happens if, in this case, I see our margin just steadily shrinking? Maybe not, every day, but, let's say over the course of X number of weeks, as I look back, I see that it's gone down. It went from 60 to 59.8, from 59.7, and so on. That's when I would dig into our full income statement, a full profit and loss statement. That's when you would want to go to your bookkeeper, if you're using a bookkeeper, and you'd want to look in the books, and you'd want to look for the category, look for the line item, look for the reason why the margin is shrinking. Look to see what category of expenses are going up. Is it an anomaly? Did a crazy expense come in because you're making a new investment or something like that? You want to look at the of the cause for that. And so I just wanted to mention that. And so the action item for this month's Backstage Pass is, what are you going to do to better monitor your own financial metrics? Are you going to put these three documents in place? Are you going to begin to look at just your sales numbers on a daily basis? Are you going to look at your margin on a daily basis as well? Are you going to look at your cash flow every week? Obviously, I would recommend that no matter where you are at, that you use all three of these. But the question is, what are you going to do to better monitor your own financial metrics? And with that, I will talk to you in next month's Backstage Pass.